Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, August 4th, 2021, and I'm pre-recording this Trading Places Live for Thursday, August 5th. Currently, futures were a little mixed earlier. Let me see what the latest is right now. Currently, we have futures actually up a little bit. We got Dow Jones futures up 78, S&P 500 futures up 9, and the NASDAQ futures on a percentage basis down a little. Well, it's up, but down from the S&P and the Dow. But NASDAQ futures are up 23.5 points. So it's still, evening, Wednesday evening. So we have to wait overnight to see what happens. Got a lot of earnings still coming out in the morning. So things can change for sure. But at least for now, it does look like we will get off to a reasonable start in the morning. Let's go through today's agenda before we get things started. So first, we will start off with the daily market recap, as we always do, then jump into talking technically. Momentum sleepers, short squeeze stocks, earnings spotlight, and the 3 you must see. Before we get into any of that, though, let me take you over to Earnings Beats. Just want to show you, for those of you maybe that are not familiar with us and what we do have a free newsletter, Earnings Beats Digest. If you go to earningsbeats.com and then just scroll down here, type in your name, email address, hit that subscribe button. We'll make sure we get you added to the list. It's a 3 times a week newsletter, usually featuring relative strength, earnings, tends to be very educational, but also presents some trading opportunities from time to time if you're inclined to trade. There's no credit card required. It is completely free, and you can unsubscribe at any time. So we'd love to have you join our community. We do offer specials from time to time that go out to folks who are in our community. So there are some benefits if you do at some point decide to become a member at Earnings Beats. And it'll give you some insight as to some of the things we look for at Earnings Beats, and give you a little flavor of the things that we do at Earnings Beats. All right, let's move on to the daily market recap. So this is for Wednesday, August 4th. Dow Jones Industrial Average down 323 points. The S&P 500 down 20. NASDAQ, however, up 19. So you could definitely see the bifurcation there with the Dow down almost 1%, S&P down 0.5%, and the NASDAQ actually up a little more than 0.1%. Mid caps and small caps, though, got hit pretty good. Mid caps down 1%, small caps down 1.75%. So that downtrend on the small caps continues in the short term. More intermediate term, though, it's more sideways consolidation. Very similar type action on the mid caps. NASDAQ, S&P 500, and the Dow, though, remain in uptrends. Looking at the sectors, communication services and technology were the 2 leaders on Wednesday. So the growth stocks there, yields were a little all over the place. I'll show you that in just a minute. But I think, when we came out early in the day with the ADP employment report, jobs were 330,000 and the expectation was for 700,000. So they came in less than half of what was expected. And that actually, I think, benefited many of the growth stocks. So you can see the XLC up a little more than 1/4 of 1%, and technology up about 1/5 of 1%. On the flip side, though, we did have energy taking another hit. We came up recently, end of last week, tried to get through that 20-day moving average, couldn't do it, and we're definitely rolling over here. Still think you got to be a little careful with energy until one of 2 things happens. Either we get back to 46, have that positive divergence on the daily PPO about the same time as we hit that April price support near 46. I think that would be an interesting level to the downside, or I think we need to wait for the breakout above the 20-day on a closing basis. I think right now in the middle, it's just no man's land. I would personally stay away from it right now. A couple of earnings reports that came out, very strong reactions. Paycom Software up 10.7%. Moderna up 8.4%. So both of those very, very nice moves to the upside. Moving over to the 10-year Treasury yield, I did mention the ADP Employment report was a disappointment. And you can see that it was a pretty wild day in the 10-year Treasury market, with the yield as high as 1.22% and as low as 1.13%. So a 9 percentage point spread, 9 basis points spread between the high and the low. So a little bit of a tug of war going on in the Treasury market. Not quite sure whether it wants to keep going lower. And this is a pretty important level. I mean, we sold off on the yield. We actually, the 10-year Treasury yield was being bought back in the middle of July, and that's what sent the yield down. But in 5 days, we went from over 140 down close to 110, 112 and change, I think. So that was a pretty big move. We got a little bit of a bounce, and now we're back down here testing it again. I think the market's just getting a little nervous. I do expect that if we break below these lows and move back down toward 1%, we're probably going to see a sell-off in stocks. Honestly, I'm a little surprised we haven't seen more selling in stocks with the 10-year Treasury yield dropping like it has for the last 2 months, because that's money going into treasuries. And every dollar goes into treasuries is a dollar that's not going into equities. So normally money going into treasuries is defensive money. And when the market's getting more defensive, normally that's when we see the stock market pull back. That has not really been the case, especially on those 3 major indices that we just looked at, the Dow, the S&P, and the NASDAQ. So yields continue to be under pressure here. That's keeping the pressure on a relative basis on both financials and on industrials. You can see on a relative basis, both of these had moved to multi-year lows, or excuse me, multi-month lows back in the middle part of July. Financials have tried to rally a little bit, but you can see industrials on a relative basis actually set about a 5-month relative low on Wednesday. So not very good action in those 2 groups. And you're probably not going to see a whole lot of good action there until we see the 10-year Treasury yield begin to trend back to the upside. All right, let's move on to talking technically. Oh, by the way, before we go into that, I do just want to mention in the morning on Thursday, initial jobless claims will be out. Last week, we had 400,000. We're expecting 381,000 this week. All right, now moving on to talking technically, just going to show you a couple of these major indice charts on a 60-minute basis. So here's your S&P 500, clearly an uptrend, sideways consolidation right now. That 60-minute PPO right near the center line, not really giving us a hint one way or another where it wants to go. I think the fact that we haven't been able to break out in the first couple days of the month, probably not a great sign, because this is when new money is coming into the market, and we can't get the breakout now. It makes you wonder if we're going to get it, as we go a little bit further and deeper into August. Now, as you're looking at this, I think it's pretty clear higher highs and higher lows throughout. We're trending up. I want you to look at the small caps. So this is the S&P 600 small cap index, and we had a top back around the 9th, 10th of June. And look at, we've been putting in lower highs and lower lows. If we go back and look at the S&P, it's almost like a mirror image. One's going down steadily, the other's going up steadily. Don't know really what to make of it, other than obviously the market is preferring the large cap names right now, especially those in technology, communication services, some of the consumer discretionary stocks. That's where the money has continued to rotate into in the near term. I would also say that the healthcare area has been doing pretty well as well. So many of the medical supply stocks, medical equipment stocks, some of the biotechs, even some of the pharmas strengthening, healthcare providers, all of those. So we have seen very strong action in the healthcare area of late as well. But then you've got energy, which has been weak. You've got materials, which have weakened. Financials and industrials, as I pointed out, struggling a little bit. And so it's just making for a difficult market, because we keep getting this rotation under the surface. But you look at the S&P 500 and you say, well, what's wrong with the market? We had a couple of moves down, but otherwise we've pretty much just been steadily going higher. Everything's fine. Well, that is until you open up the hood and you look under that hood and you start to see that there's a lot going on under the surface, a lot of rotation. But this is the S&P 500. Then we got the Dow, which also has been pretty strong. We did go down at the beginning of the month here below last week's lows. So that's a little bit of a concern, but after bouncing, coming back up, then we weakened again on Wednesday. So just choppiness, back and forth. The Dow went above 35,000 3 months ago. This was back in May, early May. And here we are 3 months later, and we're still negotiating this, trying to negotiate this 35,000 area. So it just shows you some of the chop that we've seen in the market. The NASDAQ, pull the NASDAQ up on a 1 hour chart. It's been pretty much straight up. We had that little hiccup in the middle part of July, but otherwise came back up, put another new high in, and we've been sideways consolidating like we have with the S&P 500. So I would just, look at this, realizing that we're in a seasonal period where the market can be choppy for sure. And the market's run a long way. You can see the NASDAQ, which was at 13,000 back in May. It's come up to 14.8. We did get the breakout above 14.2, which was an ascending triangle breakout. Can't really see it on this chart. But when we made that breakout, that measures ultimately up to 16,000. I believe we're going to get there. It's going to be tough to do a whole lot during the month of August, and especially with September coming up. But I do believe in the fourth quarter, we'll hit that 16,000 level. So some of this is just going to require patience. We've just got to, we can't go up every day. We'd love to go up every day. We wish every stock would go up every day. It's just not the way the market works. And you got to have some patience, because when the market gets choppy or when we do see sell-offs, all the news turns negative. And so you don't want to just blindly ignore the news and ignore the market going down, especially if you're a short-term trader. But from a longer-term perspective, I think that's exactly what you should do. Just my opinion. I'm not a registered investment advisor, so I can't give advice. You have to, make your own decisions, take your own risks. But from what I'm seeing and all the analysis I do, I believe the stock market goes higher from here. So from a longer-term perspective, I wouldn't be overly concerned about this market. Short-term, you always have to be concerned about the market in the near term. You're trying to protect your capital, so you don't want to get caught up in a big downdraft in the near term. So you got to be vigilant about taking profits when you have opportunities, and being, rather prudent with your cash and your portfolio. All right, let's move on to momentum sleepers. So what I did with momentum sleepers, I ran a scan. And so the strong earnings chart list is kind of our flagship chart list at Earnings Beats. If you're not a member, we go throughout earnings season. We go through every day, but especially during earnings season, and look for companies that are beating revenue estimates, beating earnings per share estimates, are liquid, and then their charts are appealing for one reason or another. It doesn't mean that they got a positive reaction from earnings, because a lot of times companies will report strongly, or they'll trade strongly heading into earnings, and then the news comes out and then they sell off, and they'll sell off for a period of a week, couple weeks, consolidate, and then they'll start to move higher again. So I just think, you've got to be prudent about putting together a chart list or a watch list of some sort that puts together the things that you like, and that you're looking for. And maybe it's all just technical related. Maybe you're only looking at 50-day tests. Maybe you look at 20-day tests. Maybe you look at price support tests. Maybe you look for oversold conditions, whether it's on the RSI or stochastics or some other measure of overbought, oversold. Maybe you look at the PPO or the MACD or the PMO, a momentum indicator. Whatever it is, you should probably have a watch list, because you don't want to react to stocks emotionally. You don't want to look at a stock that you've been interested in, and all of a sudden you see it up 10%, and then think to yourself, oh, now's the time to jump in. What I would rather do is look for the companies that have reported strong results. Maybe it's because of my background in public accounting for 20 years, but I believe it's really important I mean, if you think about the valuations and how they're determined, it's really about the interest rate environment and the Fed, what kind of policy directive they have. And then it's about earnings, 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 earnings. And when companies can't meet their earnings estimates, or I would even go as far as say when they can't beat their earnings estimates and their revenue estimates, I think that's a red flag. And I think Wall Street has not a whole lot of patience with management teams that aren't executing. So I think it's important for companies to be on our strong earnings chart list. I just think that when companies are executing, they're beating Wall Street estimates as to revenues and earnings per share. I think it just sets up better for potential trades on pullbacks and so forth. So when I'm looking at momentum sleepers, I'm looking at our flagship strong earnings chart list. And then I'm looking for RSIs that are down close to that oversold level in a bull market. Now, oversold typically is about 30. And overbought is 70. But when you're in a bull market, oversold, a lot of times that RSI doesn't go below 40. So I think when you get into that 40, 45 range, it's time when you've got a good stock to consider the possibilities of jumping in. And so I ran that. So the RSI had to be between 40 and 45. And then the other part of this is that the scooter has to be above 80. Now the scooter, the SCTR is the StockCharts technical rank. So the SCTR scooter, that's just an acronym. And you can go to chart school and read about the scooter, but essentially it's a ranking system that was developed by John Murphy. And it's looking for relative strength of companies relative to their asset class. So if you're looking at a small cap stock, it's going to compare that small cap stock's relative strength to all of its small cap peers and then ranks it from essentially 0 to 100. So if you're above 80, if your scooter score is above 80, then you're actually ranked pretty solidly versus your peers over the past 4 or 5 months. That's about how far the scooter goes back. So you're not looking at how you've been doing over the last year, 5 years, 10 years. It's a little shorter, much shorter term period, but I would say like 4 or 5 months. So if you've got a scooter that's above 80, you've been doing probably something right in the past 4 or 5 months. And then with an RSI between 40 and 45, you've pulled back into that oversold territory, hence the momentum sleeper. So just wanted to point out that's how I came up with it. Now, when I ran that against our strong earnings chart list, I believe there were 14 stocks. So I'm just going to, rifle through these pretty quickly. But you can see, BBW, which is Build-A-Bear, this stock had made a huge run and it's just been going sideways. So you can kind of see why the RSI would be down because it's been trading down ever since, last week of June. So stock was up to 21. Now it's back to 14 and change. So when you get those kinds of pullbacks, you're going to see that RSI drop. CAR. Now this one came out with earnings today and it was pretty strong earnings, to be honest. I think the company said it was the best quarterly earnings report they've had in their history. And this is how the stock market sometimes is so frustrating. Stock was down 16.5%. The company comes out, announces it had the best quarter in its history, and it gets a massive sell-off on heavy volume, 17%. Now, I would be watching that support level down just below $70, but it certainly seems like it's on a path to get there. Con, this one after a big gap up back in June, has been selling off for a while. Now, you can either think about jumping to a stock like this when it's selling off or wait. I mean, if it's going to get back into a lengthy uptrend, it's got to get above the 20-day first. It's got to close above the 20-day. So until we see that, I think I'd be a little careful. But this pullback is interesting. We were up to over 31 8 weeks ago, and now we're at 22. Pretty nice pullback. DDS, Dillard's, this hasn't been much of a pullback, but it's been consolidating for a while. And if you know anything about the RSI, the default is 14 days. And so if you're looking at how the stocks performed the last 14 days, well, you'll start to get a sense why the RSI is between 40 and 45 on this stock, because it hasn't really done much, hasn't been doing much of anything the last 14 days, and it's near the bottom of its range. But this support area, I would say 150 is a good support area, 160. So you got a couple levels there to watch. We have worked that PPO all the way back down near the center line. We got the 50-day test. That was after negative divergences had printed. I'll give you a couple more here. Denbury, big move up, negative divergence, lower PPO, higher price. And then we started working our way down. We've been trending below that 20-day. Got to get back through that 20-day. The breakout here occurred at about 60, and we got 3 tails down the low 60s. So I would say something down around that 60 level might make some sense for those interested. Every Holdings, EVRI. Looking at the stock here, did take a pretty good hit. I believe earnings came out on this one as well. Stock had been bought up heading into earnings. So we had that pre-earnings run, and I think it was a sell on the news. I like the fact that the AD line continues to be strong. I think anything back down in the 2021 range looks interesting here on EVRI. I'll give you one more, and then we'll move on to the short squeeze stocks. GPMT, this is Granite Point Mortgage Trust, another one that got up to about 15 and change. It's down to 1380, so it's not a huge drop, but it's also not a fast mover. But the stock's been going sideways to down for quite a while. We keep trending below that 20-day like I was showing you on some of these other charts. So we got to get that back, and we got to reclaim that 20-day to get this trend going back again to the upside. All right, moving on. How about the short squeeze stocks? So we keep a short squeeze chart list at Earnings Beats, and these are right now on this list. There are 38 stocks with short percentage of float above 20%. That means there are a lot of folks out there borrowing shares and selling them. That's how you short. You borrow shares, you sell them. Well, when you get a lot of people borrowing shares and selling them, they have to buy those shares back at some point. So if you're over 20%, that's a lot of guaranteed buying at some point. It's almost like the company has a repurchase agreement, some kind of a buyback in place, except it's not the company. It's everybody that's out there betting against the company. They have to buy these shares back. So what I look for are companies that maybe are going to a multi-month high, because when you get to that level, that means anybody that has been shorting this stock over the last few months, all are underwater. They're all losing money. And that starts to put pressure on them to think about covering, buying, which can then in turn trigger more buying as the stock keeps moving higher. So FUV is one of these that's right at this resistance level, trying to make a move. You can see the volume's been picking up recently. It absolutely could be a short squeeze candidate. 2 days ago, back on Monday, looked like it was making a breakout, reversed, but it's staying up here. It's staying up here trying to make a push to the upside. So this is one. Another one, I mentioned this one in our short monthly short report that we sent out to members over the weekend. Watch MicroStrategy. Well, the volume was pretty strong today. It was up 7%. I'm telling you, anything over 700 on this stock is probably going to get the attention of those who are shorting it, especially if that volume comes in. Volume's been strong as it's been trying to make this move up. So watch MSTR, another one that could be very strong. KDMN, check out the volume on this stock and look at these hollow candles. It's now moving up to a level. It's closed at the highest level it's seen since all the way back in early March. So that's 5 months ago. So anybody that's been shorting this stock recently is in the hole and may have to start thinking about covering, and the volume has not been light. So this could be short covering to begin with. PPO looking strong, momentum's building. That's what you want to see for a possible short squeeze. RVP, Retractable Technologies, been a little slow here. Volume ticked down today, but it had struggled to get through about 1215, and it's now done that 4 of the last 5 days, last 3 in a row. So I don't know if this is just one light volume pullback, watch, but I think if we get back through 13 and that volume starts to pick up, RVP could be a nice candidate. And do one more real quick. CRTX, this is Cortexzyme. It's been trending up for a while. Now, the volume here is not really that great. Today picked up quite a bit, up 10%. Volume started to increase. I think if we break out above about 65, 66, and that volume starts to pick up, you could see a potential squeeze here on this one. All right, earnings continuing to pour in. I mean, just about every company is beating earnings, and some of them by just a ton. Let me just give you a couple of these. Here's one, Roku. So Roku reports expected to have a profit of 14 cents. They had a profit of 52 cents. After hours, the stock's down 8.5%. I mean, that's one of those where you just kind of scratch your head. You're like, really? 52 cents versus 14 cents? Wall Street's only expecting 14 cents. We come in with 52 and the stock loses 8.5% after hours. That's the part of the market that doesn't make a whole lot of common sense sometimes. But you also have to realize the stock ran from 275 to 475 in 2.5 months leading up to earnings. So you've got to take it all into account. Keep in mind, too, that Roku made a huge move up to that high in February. And this is really just a lengthy consolidation period. Ultimately, I think Roku's going to break out. Probably not going to be tomorrow based on the way the after hours is going. But anyway, just thought I'd point that out. Let me give you a couple more. How about Etsy? So Etsy expected to report 59 cents. It reported 68 cents. Another really strong move. After hours, stock down 14%. 14% after hours. That's going to obviously take a big hit on the stock. I don't know, what's that, 28 bucks on a $200 stock. So that's going to take it back to 174. So it's going to be below this double bottom here. And then maybe let's do one more. How about TXG? This is 10X Genomics. And they were expected to lose 26 cents. They lost 10 cents. Stock down 6%. Anyway, pretty crazy. And then you have a stock like ATRC, which is actually a portfolio stock of ours. They missed. They were expected to lose 33 cents. They actually lost 36 cents. And they were basically flat after hours. We'll see what happens tomorrow. But, sometimes you just scratch your head. So these other three stocks that blew away earnings get killed after hours. And this stock misses and is relatively unscathed. Sometimes it just doesn't seem to make a whole lot of sense. All right, 3 you must see. Let's wrap this thing up. Got to go through these pretty quick. I thought what I would do is just take the top 3 on the most active on the S&P 500. So we'll just start with AMD. I mean, this thing has just been on a roll to the upside. A huge move in AMD over the last few weeks. Huge volume coming in. I mean, there's no disguising this. This is institutions jumping in. AMD looks great, but very stretched. I'd wait for a pullback. Ford has been trending down. I thought maybe we were starting to move back up. I think that was the earnings candle. Got back up to the 50, but we're rolling back over again. Really needs to hold the low that we saw a few weeks ago. And then the last one, General Motors came out with its earnings. Decent report, stock down 9%. Just doesn't matter. Closed at the lowest level it has seen since back in early March, though. And check out the volume. So that's nothing to sneeze at. Be a little careful with GM. All right, that's it for me. I want to wish everybody a great Thursday. Won't be back until next Monday for your next Trading Places Live over at Earnings Beats. That will air at 9 a.m. on Monday morning. So go over to Earnings Beats, check that out. In the meantime, I want to wish everybody not only a good Thursday, but have a great Friday. Enjoy your weekend, and I'll be back on Monday. Take care, everybody. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.